ExxonMobil is a global energy powerhouse which has been strategically positioning itself to capitalize on various factors that can potentially drive its revenue and growth in the coming years. From its cost-cutting measures pre-pandemic to its adaptability in the face of evolving energy landscapes, ExxonMobil has set its sights on maintaining its position as a key player in the energy industry. This video explores ExxonMobil's potential for increased revenue, the impact of global events on its profitability, and its strategic moves to benefit from emerging opportunities in the renewable market. ExxonMobil's proactive cost-cutting measures prior to the COVID-19 pandemic have placed the company in a favorable financial position. Oil hit an all-time low of $41.20 on the 19th of July 2020, at which point Exxon still managed to remain profitable throughout the year and pay its dividend. Since then, the price of oil has raised substantially, up to a high of $112 in as recently as March. The prices at which Exxon are able to operate in the oil market now have led the CEO to say that they are simply printing money. Their operations have been streamlined and processes improved. The efficiency of the company has significantly reduced its expenses. As a result, ExxonMobil has been able to weather the storm of volatile oil prices and generate substantial profits, effectively printing money even during challenging marketing conditions. One major factor impacting ExxonMobil is the war in Ukraine, and this has the potential to massively impact oil prices. Geopolitical tensions and disruptions in oil supply can cause oil prices to rise, leading to increased revenue for oil companies. Analysts suggest that the energy crisis last year was mitigated by a warmer than normal winter. However, if Europe experiences a colder winter this year, it may result in a massive impact on oil and gas prices due to the inability to buy from Russia. This could further contribute to ExxonMobil's profitability as they are large providers of oil and liquefied natural gas. Even as Europe works to bring on more capacity, the fact that Exxon have this ready to go could mean that profits could soar through the winter. One other major factor impacting the future profitability is ExxonMobil's foresight in recognizing the growing demand for electric vehicles and has positioned the company to profit from the industry's transition. While lithium-ion batteries power EVs, it is important to note that the manufacturing process relies on plastic components. ExxonMobil, being a major player in the petrochemical industry, stands to benefit from an increased demand for plastic as EV production ramps up. Additionally, the opening of lithium mines provides ExxonMobil with an opportunity to secure the raw materials necessary for battery production, reinforcing its strategic advantage in the ever-growing EV market. Alongside the transition to the EV market and lithium mining, ExxonMobil's increased capacity in the Permian Basin and higher than expected yields in Guyana highlight the company's strong position to benefit from its existing assets. The supply ExxonMobil can currently bring to the market at current oil prices is already highly profitable, and any increase in price will further amplify its profitability. Warren Buffett's large stake in rival Chevron suggests that oil is in a super cycle. And while the energy transition may be occurring towards renewables, the price of oil and its availability suggest the potential for 10 to 20 more years of continuous profits and stock price growth. This is favorable environment sets the stage for ExxonMobil to carry out even larger share buybacks than the already promised 25 billion and future dividend growth. We can see from the chart that ExxonMobil currently has an annual dividend of $3.64, which is roughly 3.39%. And looking at this, we can see that it's been steadily growing its dividend since 2020 to now 91 cents a share. I expect this to continue to rise in the near future. Looking to my current portfolio on eToro, we can see that ExxonMobil is my top performing stock. I currently hold 20 units and have seen a profit and loss of about $569 of positive gains. This represents a 36.29%. The current value of my ExxonMobil investment is just over $2,100 and I expect this to grow in the future. Many people say that oil is a cyclical asset, but I believe that the current market environment means ExxonMobil can continue to exploit this market and likely see gains of about 100 to 400% in the next 10 years without being too unrealistic. Obviously, there will be a load of factors that will impact this, but for now, I believe the accessibility and supply that ExxonMobil can currently give to the large-scale market means they are in a great position to continue to raise profitability over the coming years off the back of their current cost cuttings. Looking to the analysis feature on eToro, we can see a range of analysts predicting ExxonMobil stock to rise to about $140 in the coming year, with most estimates running around $138. I believe this is on course with my current estimation that Exxon could see 100 to 400% profits in the next 10 years. If you want more content like this or would like some analysis of other industry leaders, please subscribe for